All right, so fire away the questions, dude. Do you have any specific rules when anticipating a trade using CSD? Candle 2 before closure, and you also do. Okay, so are you saying trading candle 2? Like how to trade candle 2? Because I do that. And that's specific to drivers, like trading drivers. I think that's your question, so we can go ahead and go over that. Um, so in order to trade a candle 2, you obviously need a key level to trade away from, right? Because how can you anticipate a candle 2 if there's nothing to reverse from? Um, so I can refer to a couple of trades that I took. There's actually like back-to-back days, I'm pretty sure. It's over here. So it's this day. I took two trades this day. I just remember this. I took one on NQ and then one on YM, right? So if you check here, there's SMT here. So this is Monday. Holy frick. Here's the weekly open. Weekly open, weekly open. If I go on ES here, what do we see? A lower low put in, right? So we have a swing formation from that low. Where should we draw into? If I just bar replay here, what can we draw into coming into the week? Is this swing point high, like pretty simply, right? So just a candle for open, low, high, close into this high. That's my draw on liquidity. Pretty simple, pretty straightforward. This is really when trading is really easy. It's when the daily chart is within some sort of model. Like there's a clear reversal point and target. This is when it's super clean. So if you're trading continuation day, what do we do? We mark out EQ at that previous candle's range. This is a mechanical way of viewing wick size. We want to see that small wick form to support expansion away from this swing point for continuation. So what do we do? What did we do last stream? We look for a key level within the upper half of this candle's range on the 1 hour and 4 hour, right? Because GXT requires, if you're going to trade the protraction phase, it needs to be formed from a 4 hour or 1 hour key level. So if you drop the 4 hour, do we have a key level here? Not really. Honestly, there's nothing here. This CSD, like sure, but it's not within the previous day's range. It's just not that relevant, to be honest with you. If I go the hourly, okay, cool. We have like these equal lows, right? That we could potentially form the low of day from, right? Now, one thing to note is if you have an invalidation that is printed, or sorry, it's like really close to the opening price. So you see how these lows are pretty close to the opening price of the new day. This is usually going to get hit in Asia or London session. So if you just go to my slides here, if you go to invalidation points, this right here is going to form in the form of session highs and lows. So if you have an invalidation point like this fair value gap and price hits it, let's say in Asia session, but just bullshits, it's just like consolidates. Well, we don't reverse from consolidation, right? So you're going to see that here, if I remember. So cool. You have your initial, we're opening low first, right? So that's your first sign of a bullish day, right? There's a couple things we look for with candle profiles. It's ideally, if you're bullish, it opens low first, so let's check one. The second step is a small wick, right? And obviously, the wick needs to be formed from a key level. So this is your only key level that you have from the previous day. And remember, the way we frame continuation, we are only looking for for key levels around the opening price from the previous day, right? If there is none, or maybe we don't reverse from that, then price has to reverse from a key level created from the current day, which is generally created from session highs and lows. So that's what we're going to see here. We have this swing point, right? But remember what happens when we create a swing point. What do we want to see happen, right? If this is a key level that should form the low of day or could form the low of day, it should expand away, right? Let me make sure I'm good here. Yeah, I'm good here. It should expand away from that low of day and create some sort of, invalidation, right? Where it should create that CSD that we talked about. Remember, it all depends on what time frame or time that key level got hit. This is when you're going to refer to, what time frame CSD, but that's not what we're really talking about right now. So if price doesn't do this, remember, if price doesn't expand away from that swing point, then what do we require as our new invalidation level? It's the swing point low, right? Because that would just be consolidation. If price expands to a relevant level and doesn't reverse, then what is that generally going to be? It's either retracement or consolidation, right? We don't trade away from retracement or consolidation, so we require that manipulation. So it's AMD reversal, right? This goes back to phase of price. These all tie into each other, right? AMD reversal is you expand into a level. So if I go over here, we are expanding into a level, but you don't get this signature of a swing point and price expanding away, right? Expansion mouth expansion, essentially. You just consolidate. So if I play price here, what do we do? We just consolidate, right? Clearly we're not expanding with this swing point. We have these really, we can't even displace over any of these highs. Not a reversal signature, right? So what do we require? Mechanically, this to be our new invalidation point, right? Because if price doesn't reverse here, then what are we going to do? We're going to disrespect the EQ of the previous candle's range, and we're likely going to see all of these lows more than likely, right? So you can already set invalidation levels with how the current day's range is forming, not just off the previous day's range, right? So mechanically we can define that. And it should look something like this, right? Where we expand to the level, we consolidate, and then we manipulate that consolidation low, right? So that's why I have these slides, right? They're not just there. This is actually how we actually trade, right? So as soon as we hit that key level, which is the consolidation low, we do the same shit. We need to see a swing point from it. We need to see price expand away, right? Because if that's going to be the low of day, then price should expand away, which is going to validate. That's just, when price expands away, that's what's going to create that higher time from CSD or your new key levels for continuation, right? That should support continuation. So just with that in mind, we're waiting, right? If you're a London trader, this is absolutely perfect, right? You have your invalidation level. London should manipulate this level. Now, what do we have here? When we hit a key level, or when one asset hits a key level, what are we looking for? We're looking for SMT, right? That's our first step. Boom. We can confirm this with an SMT, right? We have that initial. What am I saying? Initial. We have that what do you call it? SMT there. We have the daily opening low, right, etc. This is also in the form of a relevant swing, right? Look at the space between this low and maybe these lows, right? These lows here are failure swings to this low. So you see the space between. We need to see price. We want to see price manipulate relevant swings, because if you don't manipulate relevant swing, where are you going to go? Probably to the next relevant swing, right? So it's really key that we have an SMT here, right? And we have the candle 2, right? So essentially it's just the 4-hour open low first. So here is the 2 o'clock candle, the first hour of the 4 o'clock, not the 4 o'clock, the 4-hour candle. It opens low first, so that's, again, exactly how we want bullish candles to form, just like the daily here. It's opening low as well. We have the reversal, so it's just GXT, the low of a 4-hour candle put in from a reversal candle on the hourly or 4-hour. Now you can drop down to the lower time frame. Do we have a CSD in candle 2 to validate it? Of course, yes, we do. We actually have a propulsion block as well. So now you're doing the same thing, right? You mark out the EQ of this whole range, looking for a key level in here. What could we use, right? This fair value gap or whatever, right? Or we'll create one. So boom, we dip lower. Now again, I don't really give a shit that it comes to EQ of this candle's range, because it didn't invalidate this as a key level, right? When you invalidate a opposing candle, it should disrespect the EQ, but we perfectly wick that. We even respect this fair value gap, so I'm not really too concerned with that. You can just straight up trade this here, and I think NQ is a bit stronger. Yeah, NQ is stronger anyways, so you want to trade this asset, right? Because it creates the higher high, and you see it's not as deep of a retracement. So mechanically, you can take this, right? Here's the 1-hour candle, also opening low first. So you see how every single candle opens this way, ideally. So what do you target? Obviously, this is your main target. Or this is not even your main target, actually. It's actually this, that daily swing point high. But obviously, we can take partials on the way, right? Here's your first relevant objective, right? So when we have an overall draw on liquidity, like a higher side from draw on liquidity, on your way to that higher time draw on liquidity, you're going to encounter roadblocks in a sense, right? Where like these are relevant highs. You see the space between this high and this high? You need to see price fail to manipulate this high to continue to these highs, right? So that's what we want to see here. So this becomes like a relevant partial point would be right here, right? So if we play price, that's your first TP. Now there's 8:30 news this day. So we're gonna play price there. This is what I traded. So again, this is a lot of yapping, but I'm still talking. This whole example is to show you guys how to trade a candle too, which we'll get into a little bit deeper, but later on. So 1, 2, all right, boom. So you could have traded this. I just wanted to show that example. If I go to the 4-hour chart, you're gonna see it. You have your candle 2 reversal to expansion. It has quite a large wick, so you can still trade this because again, it's at the only area for price reverse from. It also has SMT. It also opens low first. If anything, you could just target this high, like if you don't know if price is gonna expand, right? Or you could take a partial there. But what's important here is this 8 o'clock candle, right? This is 8:30, right here. So like I said, you need a key level to be hit to even expect an expansion. Now, this is very there's a lot to go over drivers, and like it's pretty deep and specific. So one thing is if the daily candle hasn't yet expanded prior to a driver. So if I play price here, do you see how the daily candle hasn't even yet expanded or hit anything relevant? This is when the driver should just expand, right? Because if the body of the candle hasn't been created, when's the most relevant time to create the body of the candle? It's around the drivers, right? So it should just expand, but there's conditions that need to be met for you to even, be involved in that, right? You need to be ideal. We're not getting too deep into it because again, my video is going to cover this, but to trade a candle 2, essentially, you need to be trading the same thing as we do on the 4-hour, right? It needs to be a reversal into expansion candle, aka that small wick, right? That's what we need to see. So if I go to the 3-minute here or the 5-minute, the reason I'm using the 3-minute here is because it's also a 30-minute expansion candle, either or, like it's the same shit. So you see that this candle hit a key level on the 30-minute. So we're just reversing off this candle one's low. Now with this continuation contract, you don't see a sweep, but if I go over here on like micros, there's a clear sweep there, right? So it's not a, what do you call it? It's not equal lows, right? So another thing is we're closing above the new week opening gap, right? So we're closing above it, using it as support. We essentially have PD area alignment, right? You have this level of support aligned with this fair value gap, which is what this fair value gap is your invalidation point, right? So remember what we said. If it's a London reversal, what do we need to have, right? An hourly or 30-minute CST ideally. So we have, right? But price already expanded away from that. So what you're seeing here is this exactly. You have the initial reversal, but price expands away from it. So if you need to continue, what are some signatures in price that we need to see, right? We don't want to see deep retracements, right, on our way to the draw on liquidity. So therefore, these fair value gaps and premium need to hold, right? So these fair value gaps, right? We don't want to see price come all the way down here, retest it, before taking out this high. That's really invalidation, right? When you think about continuation signatures on within expansion, want to be within an expansion candle. So we're already doing that fractally. We're aligning the daily expansion candle, the 4-hour expansion candle, and the 30-minute or hourly expansion candle. So it's essentially GXT, but I'm trading a 1-hour C2 or 30-minute C2, and I'm pairing it with the driver, right? Now, what do we want to see? Shallow retracements. So this is what I mean by like this fair value gap needs to hold, right? This one right here. So we have that, and if we have an assumed low of day prior to a driver, then what should the driver do? It should expand away, right? So when I see this happen, let me just delete all this stuff. When I see the driver start to expand away from the low of day, this is my entry, right? It's simply this, right? And I'm targeting this high, but most importantly, I'm trying to target this high, right? And I actually got break even on this trade. and then I took YM because of a strength switch. If you want to study that, you can study that. I'm telling you, it's just so good. But I did take this, right? And you see that 830 expands away from the low of day. What do we see prior to the driver again? These are things you can start to anticipate. Prior to the driver, we did what? We retraced prior to driver. So after retracement into a key level, which is that 30-minute fair value gap or hourly fair value gap, what should we do? We should expand, right? So it's a bit different if the driver opened here. It'd be totally different if the driver opened right here, because we expanded prior to driver. We didn't retrace prior to driver. So this is when the driver, you might get like an opposing run to the draw where it will retrace and then close through. But this is a bit different where before the driver we actually retraced. So there's no need to really retrace more when we're in the invalidation point. Does that make sense? So it should just expand. So I'm telling you, this stuff gets really detailed, just like my NFP trade Friday. Not lucky. It's not lucky. It's not gambling necessarily. It's like there's logic behind it, like behind everything. So that's how I trade candle 2s. Now if I go to this day as well, you're gonna see the same thing. I think it was around 9:30 on NQ. Yeah, so this is something that AM took as well, I do believe. So if you check this day out, and then we'll go into the next question because we're already like 24 minutes in how to trade a candle 2. But as you see, the previous day printed this SMT, right? But it didn't reverse. We didn't expand away from the SMT. So if this SMT is going to hold, when would we expand, right? We should expand the next day, right? And if we haven't even yet expanded at all, right, within the previous day, then a lot of times early on in the day, we will just expand without taking out the previous day's low. This is something you saw last week on Tuesday, I think Tuesday or Wednesday. We'll go over that in a minute, but if I remember. Now to obviously trade away from this reversal point, we want to always be trading away from some sort of key level. So when I come into the driver, if I'm trading the expansion phase of the daily candle, this is not the protraction phase. As you see, we're above the daily open. I want to be trading away from some sort of relevant level above the daily open, right? On the 1 hour or 30 minute, we went over that earlier, right? Last stream for continuation. But what I see here is like not really anything relevant, right? So if you see prior to the driver, we expanded, right? We have some sort of expansion on like 30 minute or whatever, right? Some sort of expansion. But what I'm seeing here is like a bunch of failure swings, to be honest. Like I can't really trust this, right? We also don't have a swing formation prior to the driver. Like we can't trade this either way. Like we couldn't even trade this like a candle 4 or whatever. So it's like if all the assets look like this, if I show you NQ, they all have these failure swings. The daily open is also like kind of not really relevant. So the framework is like kind of sus, right? If I look at YM, it's even worse. Like look at all these failure swings, right? And you can already gauge strength like this, right? Look at YM where it's a lot more consolidative. We didn't really expand away at all. But when I go to NQ and ES, we're expanding a little bit higher, right? We're also just a little bit higher in this range in general. So you can already gauge strength. So what can we assume? What can we anticipate? That YM, we want to see YM trade into these lows because this is the weaker one, right? And what would this do? This would create a protected swing because we don't want to trade away from these failure swings. So if there is no reversal prior to a driver, or there's nothing to trade away from prior to a driver, then we want the driver to create it. It's the same thing as if we have a fair value gap here and the driver opens here. Ideally, the driver goes and trades into that fair value gap, creates that candle 2 or that swing formation. That's how you pair. There's many ways to pair a driver. It's not just with manipulation. It's with some stuff like this. So this is an example of like a manipulation. So what you're going to see here is that exactly, right? So remember we talked about invalidation levels are either going to form within the current day or the previous day. So this is with the current day, right? It's forming these levels where like price has to manipulate these levels, right? If we're going to expand away from this low of day. Because if you fail to manipulate these levels, we're going to go probably to the previous day's low. So when's the most ideal scenario to manipulate these levels if we haven't done it prior to a driver? Is at the driver. So exactly what we see, right? So I'm going to NQ and ES. We obviously have a higher high put in, right? And a candle 2. right? So this wick is forming the SMT, right? So now I can drop to the lower time frame. This is exactly what AM took, I think, as well. I'm seeing that. What did we do prior? We had that retracement prior, but really it's the SMT that is the trigger for this, right? Because we're not retracing into anything relevant, right? There's no hourly fair value gap, no opposing candle that's super relevant. So it's like I'm demanding this manipulation, right? So that's what we have. The driver is expanding away from that manipulation, right? You get that here, and you can just enter off that, which is what I did. So I took 2 trades this day, by the way, and I'm targeting all these failure swings. You see this? But price again comes back. So it took like 2 partial wins this day, or not this day, but again you see it come back, and then we form some type of 2-stage SMT, which is what I took for 10 a.m. here. You see this 10 a.m. open, high, low, close into these highs here, which is the previous day's high as my target, my main target, which is right here. That's one of my targets. And we kind of just bullshit for the rest of the day, so I have to close my position. But yeah, there's some sort of SMTs going on here, and we have 10 a.m. right here. You see, we have a driver at 10 a.m. I'm pretty sure. Let me pull up my indicators real quick. I'm like pretty positive we have one. What day is this? Yeah, 10 a.m. news. And what we're having here is we have this manipulation here, and again an SMT here. So we're pairing a driver with manipulation and SMT, just like we did with 930. This 4-hour candle is also opening low first, so that generally supports some sort of move. And what we have here is like prior to that, this retracement, it didn't trade into anything relevant. You see these equal highs? So it's like we can't even assume that there's some sort of reversal being put in, right? The daily is already supporting expansion. The drivers are expanding away from that, the low of day, and have yet to expand it into anything. So it's like we're not even considering this as a reversal, right? This here, this bearish move. It's more just to like a retracement almost, right? And like I said, there's some 2-stage SMT, which I traded ES here. I traded this exactly right here, right? And then it's again into all of these highs. I think I traded to this high, if I remember. The space between this high and this high are quite significant. So I think I traded into that. Yeah. But yeah, that's a little bit how to trade a candle 2. Sorry, it just took like 30 minutes to show that, but y'all know me. Hello, sir. What's up? You'll get first up one, two thing. Show you some information hard work you put in all the years led up to this moment. But thank you for the opportunity. Learn from you. I've been completely organized. Oh, nice. Intuitions are articulately placed. Oh, that's pretty sweet. Appreciate that. SMT framework. So I would watch the April 5th stream, and then I would watch my last weekend stream to really put in, or really to help you with the framework. Can you go over the 2 GRT you took from ERL to IRL this week? ERL to IRL? I took an ERL to IRL? Man, I can't even remember, dude. ERL to IRL. Huh. I don't think I remember that. Do I remember that? ERL to IRL. I don't think I took a... Did I short this week? Bro, I don't even remember. I long this day. I long this day. I long this day. Monday. Did I trade Monday? Fuck, I don't remember. I long this day. Took a loss. Monday. Did I trade Monday? Fucking hell. I think I did. I think I shorted Monday. I don't even remember, dude. I'm not gonna lie. I don't think I took a IRL to IRL though, no? Maybe on another asset. I can't even remember, dude. Like, I'll take quite a bit of trades, so. When when not to fade a 4-hour candle. Okay, so sure. Oh, daily and 4-hour. Okay. So for 4-hour, we'll go over 4-hour real quick. So 4-hour is only when you're trading within or like after NFP or CPI. So I'm gonna show you an example of that. This is because you have a lot of volatility, right? So price is not gonna wait around for like 10 a.m. just because the wick is large, around these drivers. So this is a day here. So let's go over some SMT stuff here about lagging assets and stuff. So a lot of people are going to pattern trade this day right here. Okay. They see a candle 2 closure. They see a fair value gap being respected. They see an SMT at the lows. Right? Where I go to this asset, here's the SMT, right? But this asset over here has a bunch of objectives to trade into, all these lows, and we failed to manipulate this low, right? So that's one thing about lagging assets. The asset that sweeps needs to manipulate, right? So what we see here, this expansion right here within this candle, right? This expansion here, you're going to see a continuation signature after the expansion. So the asset that is the weakest one, right? It's the weakest one, obviously, is putting in a continuation signature for obviously a continuation bearishly, right? Because if you expand and consolidate, what is that? A continuation signature, right? This is exactly what you're seeing. Expansion, consolidation. So if the strongest asset is showing that, then that means it's lagging behind. Right? It's lagging behind. So what's the ideal way to trade away from a consolidation, right? It's manipulation ideally, right? So check this out here. This is the previous day's range, EQ of it. Here's the daily open. Now this is specific where I don't really care about the EQ of the previous day's range. Why? Because look here, if I draw the EQ of the previous day's range, we're literally opening at EQ or even above it. So this becomes absolutely irrelevant. What becomes relevant is key levels around the daily open. That's what actually is relevant, right? So you see how this swing point high is close in proximity to the daily open. It's also a relevant swing, right? Look at the space between these highs here. So ideally, pricing goes and manipulates this consolidation high, which is a relevant swing, which is positioned in the previous day's range. Remember we talked about for continuation, either the reversal of the day needs to be formed from a key level from the previous day or current day. This is an example of the previous day, right? So I can even probably find a slide that covers that. It's right here. This is continuation, right? It's the same shit, right? Like where the previous day reversed, it's the same thing as like maybe this example where we're just continuing either way. It's like either way the previous day reverses and we're continuing, or the previous day expanded and we're continuing. It's the same thing. You're still having a key level within the previous day's range. So ignore this reversal candle because it's the same thing. We have a swing low positioned in the previous day's range around that daily open, right? So you see that? Exactly what we have here. We have this swing point high positioned in the previous day's range. So ideally we can go manipulate that high, right? What do we notice about this large wick, right? It's absolutely huge. Now, what we see here is we have NFP this day, and we manipulate prior to the driver. So what does that mean? If you manipulate prior to driver, what should the driver do? It should expand away, right? So there's also SMT here. Jesus. There's also SMT here, right? So that's even better. What do we want to see when we hit a key level to form the high and low day? One is SMT. The second is a reversal signature. So exactly what we see here, right? The first reversal signature is a swing formation, right? But that's not what makes it valid. Right? A lot of people think just because you have a swing formation makes it valid. That's absolutely incorrect. So first we have the swing formation, but then you need to have that reversal signature, right? Ideally, some sort of expansion method expansion, and you need to see continuation signatures or expansion signatures away from that reversal, right? So shallow retracements, opposing candle supporting price, right? So here we have the initial candle closure, and then we have the expansion method expansion, right? So when 8:30 comes around and start to trade away from this high, right? The fact that it fails, you're gonna see, the fact that it fails to trade higher is a sign for continuation, right? So here's 830 right here. You see it just starts to trade away. So this is my entry right here. It's literally, this is the 830 candle right here. It's validating this opposing run, or this candle here, opposing candle, sorry. And it's also just expansion, retracement, expansion, consolidation. We haven't traded into anything relevant, so we should continue that expansion, right? Sorry if you can hear all these fucking noises, dude. It's so annoying. But this is what I traded right here, right? And I'm trading within a reversal candle on the 4-hour time frame because of the driver is within that 4-hour interval, right? And it has the volatility to expand. And this is where I took the low all the way down, or my trade all the way down to these daily failure swings. Does that make sense? Now I'll show you one more example. Don't ask me how I remember this shit, I just do. But coming into this day, it's a little bit about SMT. I'm telling you, there's so much to talk about with the SMT. So check out YM. You see the close, it's bearish, right? It's an expansion candle, right? When I go to ES, it's more of like a reversal candle, but on NQ, it's a clear reversal candle, right? So that's showing you, that's already gauging strength, right? Where NQ is the strongest one, YM is the weakest, ES is the middleman, right? So which asset is more than likely going to trade into this gap, right? Probably NQ because it's the strongest one. So what you're going to see here is you want an SMT to form here, right? Because if we can gauge the strength between the weakest and the strongest, we know that NQ is going to trade into this high more than likely. But for price to expand away from this gap, we want an SMT to form at the gap. So exactly what we get here. You can already anticipate it because of the strength that we already identified, right? And now, what are the same process that we do, right? Is this needs to be supported by the daily candle, either two ways, right? It's either supported by a daily expansion candle or a daily reversal candle with like a large wick. But they both need to do the same shit. They both need to open high first. So if you look here, they both open high first. So either way, this is kind of like a reversal candle, to be honest, because it is a reversal day because NQ and ES put in that reversal candle, right? And this is more on the, I can't find the daily open here. This is more on the large wick size if I show you here. You see that the run from the daily open is very large. So what does that mean? It doesn't mean we can't trade it. We just adjust our targets, right? To either the current day's low, which is Asia low right here, or just this low that's in close proximity to the daily open, right? Which is just the weaker asset, so it's more than likely going to trade at this low over any of the other assets, right? So what we have here, there's two ways you can view this. You can view this as internal to external, or just in some sort of order pairing ranges where we manipulate the range high and we're trading into the range low, right? Now, what do we always, pair our key levels with to form the high and low of day? So remember, they need to be formed from 1 hour or 4-hour key levels. So boom, we have a 4-hour key level or a 1-hour key level or above, right? It's a daily previous high or fair value gap essentially. So that's obviously above the daily. But it's also a 4-hour swing point. That's a check, right? Pretty simply. Now when we hit this key level, we want to see SMT. So we have an SMT. Now what else can we use to confirm narrative is drivers. So we're going to see that this is CPI. So CPI here. CPI trades into this this high, right? Within the 6 AM candle. Look at the candle, that large wick, right? Doesn't mean we can't trade it because of CPI and NFP specifically, right? These are the drivers that actually move the market, not really some like random 830 news. Generally doesn't really do much. So we see 830 manipulates. So if 830 manipulates, what should 930 do? It should expand, right? And here's the reason why I took this trade on NFP on Friday, right? It's because we put in some sort of reversal, and there is a confirmation to a reversal put in prior to NFP. The same thing here. The same thing goes for here. There is a confirmation that is being put in prior to a driver. The driver being 930, right? And obviously we're pairing this manipulation with 830. So if you go to my Figma slides here, just with drivers, the if-then scenario, here's one. There's really two things here, right? If 830 manipulates, then 930 should expand. Now this is the same thing as this. If a reversal has been put in prior to driver, the driver should continue, right? So a reversal has been put in prior to 930, right, which is a driver. So it should do what? It should expand. Now, one key thing to note here, remember when I mentioned this earlier, if you're within the protraction phase and the driver is released, then this is when we want to see the body of the candle being printed. But even most importantly, you see how price hasn't expanded away from this manipulation. We haven't got, expansion candles away from that. This is when the driver is going to be one-sided. It's going to just straight up rip lower, because if you haven't expanded before the driver, then you can't consolidate or retrace, right? So there's only one thing to do after manipulation. Like I said, it's not retrace or consolidate, it's expand, right? So that's what I'm anticipating right here. It's just like Friday. There was only one thing for NFP to do, because we haven't yet expanded, and that is expand, right? So if I go here, what are we opening up within? Or what do we have here? The fractal model, right? Candle 1, candle 2, candle 3. Ideal swing formation, because we have this 30-minute CSD. So I'm just going on the 5-minute here because it's a lot cleaner. I see a bulky series of opposing candles, right? Where this is what we call a positional entry, right? I'm not waiting for candle 4's high to be put in because of the narrative. It's because of these drivers. So when we think about trading a candle 2 reversal in the hourly 30-minute, or we think about a positional entry, it's all revolving around drivers, because I can bend the rules and I can be a little bit more aggressive or whatnot because of the narrative being confirmed, right? Because of the one-sided narrative confirmed by drivers. So you see how both of these things are revolved around drivers because I have the additional narrative confirmation. So, and we'll get into positional entries, like the little things to look for, but this is one of them, right? Where the candle 4 in this case is opening near a clear invalidation point, a nice bulky opposing candles, right? Series of bulky opposing candles. So I can't talk. So it's like this is where the high of that driver should form and just expand away, right? So this is what I traded, and I have that posted, somewhere. And you see the clear one-sided expansion because the daily opens high first, puts in that reversal. The opening high first is forming this low resistance liquidity in the form of session lows, if I show you here. Right, so that's one of the reasons why we want to see price open high first, especially with a reversal day, this large wick. It's more likely to expand with that large wick if there's actually low resistance to targets, which is why we require it to open high first, right? So that's what we see here, and price trades into that low. So that's how I trade 4-hour expansion candles. Can you go over the relevant low trade you took on Thursday and explain your thought process? Thanks. After the NFP trade, also euro to IRL trade is on YM. You mean IRL to euro? Go over the relevant low trade you took on Thursday. Let's see what I took on Thursday. Oh, I remember that trade. Yeah. Thursday. Yep, this is a good example to go over here. So just weekly range logic, it makes sense to long to this high, right? Because what we have here is just like when we think about trading continuation on the daily time frame, where we look at the previous day's range and the current day's range, like we're just forming a key level or reversal within the current day's range. Same thing for the weekly. If I want to trade a weekly continuation or just a higher time for continuation on the daily, I'm going to be looking within the current week to form that reversal in the form of like Monday's low or Tuesday's low or something, or the previous week's range, right? So here is an example of looking within the previous week's range. When I pull up these candles here, if I mark it EQ this range, but most importantly, and just to simplify it, it's a relevant level around the opening price of whatever candle you're trading. So here is the opening price of the weekly candle. We have a relevant low right by it, right? Which would allow that small wick, right? So you see the space between this low and this low? That is what counts and is, what do you call it? Kind of what the fuck am I saying? The space between the lows is what um, what am I trying to say? Identifies or I guess signifies. I don't know what I'm trying to say, dude. I'm retarded. This is the definition of a relevant swing. It's the space between the lows. Okay, so that's what we have here. We don't care about any of these lows. Don't care about any of these lows, right? Because they're just failure swings to this low. And this is a type of consolidation. It's after an expansion. We're making these super deep retracements in the range. We're not taking out any lows. We can't displace over any highs. This is a type of consolidation, right? Which is almost like seek and destroy in a sense. So when the previous day trades at this level, that sets a current like a low of weak candidate, right? Because it's when we actually manipulate a relevant low, that's what creates a protected swing, right? So we're just creating a protected swing in the form of Wednesday. So what do we do? What does price do away from protected swings? It expands away from them into objectives. So we expect this day to be a continuation day into this high here. So sorry, I literally cannot talk. I don't know why. So as you see prior to 10 a.m., we haven't hit this high. This is the line. This is that daily high. But we also haven't formed some sort of relevant low of the day or anything relevant to trade away from prior to the driver. So I actually took 2 trades this day. One was to this low, and then one was away from this low. Now this was an apex trade, pretty small R, like probably less than 2, just to get to this low. And then once I saw the reaction, then I traded, obviously the continuation. Now, what we have here is an expansion, right? So we also took this trade here because we knew that this was a relevant swing. But after price expanded away from that relevant swing, you get some sort of kind of like a consolidation phase, right? Where we can't displace over highs, right? Necessarily, but we have this low here, but this is an SMT, but there's a reason why we don't care about this low here. We know it's going to get swept because if this is going to be a true reversal point, then would we not want to see, guys, deep retracement? So this is one of the reasons why I already knew that this SMT was going to fail and that all the assets were going to run into this low, right? But yeah, that's one of the reasons. But anyways, this is a relevant swing to put it simply, right? This swing low is really spaced out, far from this low. So ideally, if price is going to continue to go to this high, then what do we want the drivers to do? We want the drivers to manipulate this low, or just price to manipulate this low. Why do we not care about price coming to the current low of day? So the low of day is formed from nothing. It's formed probably within the first 10 minutes of the day or some shit. It's not, obviously a time that we ideally want to see the low high day being created, but that's fine, right? We don't need to revisit this level because the actual relevant level is positioned above the daily open, right? Not below it or whatever, right? So we don't need price to come all the way down here because we just need price to manipulate this level, which is above the daily open, like I said. So that's what we see here. This price trades into this low, right? And this is 930 that trades into this low on all the assets, as you see. This is the same relevant low on all the assets. Now, one thing here I will mention is look on RTY as well. We have yet to trade into these highs, right? And what are we doing here? We're creating a new low of day. This is the only asset that creates a new low of day. But what you see is some sort of strength switching. So I'll leave that up for you to study, but that's how you kind of know this is going to reverse. That's for one reason, but also the 10 a.m. news event is expanding away from this. Right, so here's 10 a.m. right here. Sorry, on ES. Here's 10 a.m. and it's expanding away from that. Right, so if the previous drivers didn't reverse, they didn't reverse from the swing low, then obviously we want the next driver to reverse, which that does. So this is, again, drivers are confirming narrative to where like I can bend the rules, right? Because obviously there's no swing point here. I'm trading candle 3 when we don't have a candle 2. So mechanically, that's not valid, right? But with experience and obviously extra narrative and whatnot, look at the point of reversal. There's failure swings as well. That's adding narrative as well. But this driver really confirms the rate. And the whole goal of my model is to align expansion candles. So if I go to the daily, the daily had a small wick at this point. Obviously, this is the whole wick, like right here. It's very small, so it supports expansion. It supports the model that we're trading, which is some sort of manipulation into this high on NQ, right? But also, it's just this relevant high as well. So this is definitely a relevant high on ES, especially because if you look left, there's literally nothing. I think this is the same high on NQ, but this is really far away. So you want to get in before we take out this high. So really, this is your model essentially. It's manipulation of range low, expansion to the opposing side. So now I'm trading within a bullish expansion candle on the daily. So now I need to be within a 4-hour expansion candle away from that key level, right? So you can even view this as like a fair value gap as well, but it's really not. So this is manipulation of these lows, but I'm trading within a 4-hour expansion candle and also an hourly expansion candle. So I'm still aligning through expansion candles. That's really all I care about, to be honest. The fractal model is like a mechanical way of identifying reversal. So this is how I traded before I even used the fractal model. Is I would just look at the current 1-hour candle that I'm trading. It had to support expansion. Simple as that. So that's what we have here. And candle 2 obviously did not print that CSD, so candle 3 prints it. So that's what makes it valid, right? It's the same fractal model rules, where if candle 2 doesn't create the CSD, but candle 3 creates it, you can enter on the first CSD, right? And I'm putting my stop loss at this body low because, for one, I don't know how far price is going to expand past this high, so I want the smallest stop loss as possible. So around here, right? But also, we shouldn't create, after a true reversal has been put in, we don't ideally create these super deep retracements, right? Does that make sense? So it's like once this CSD is confirmed, like the reversal is confirmed, I don't want to see a super deep ass retracement. You don't want to see that. So ideally price doesn't come all the way down here. So you guys see me a lot of times put my stop loss at the body. Sometimes that cooks me. Like I got cooked for it on Tuesday. But there was an SMT that printed there. So that's really what saved it. But generally, if price comes all the way down here to the body low, especially when it's a really small body, you're going to get cooked regardless. So because, again, price shouldn't retrace that far. So this is my trade. Now, I saw some of you guys take this as well, which is a good trade because of strength switching, right? But we'll get into this stuff, man. Like, we'll get into the strength switching stuff. It's very high. It really confirms, like, pretty much everything. That's what confirmed my trade. If you want to study strength switching on Friday, why I took indices longs before NP, strength switching confirms it. But anyways, once we fail to once we fail to expand through this high, this is just seek and destroy, right? Because we're essentially already doing that. Where we took out this high and then we're taking out this low. Now we're just taking out the other high and then we're obviously continuing that. And it kind of makes sense because NQ did take out that relevant high. If I go on over here, NQ took out that relevant high where ES is super far away. So again, there's really nothing to trade into. It's also, the daily range is pretty extended, and so is this whole range, right? You kind of have to view this reversal candle as an expansion candle because this expansion started from the wick down here and expanded all the way up here. So it's already kind of overextended. So this little move right here is a lot of times all you need, right? Is this little move. And then we can manage. But to enter like after we take out this high, it's kind of a no-go, right? Because NQ took out the high. So if you're trading this here, way less high probable. Way less. And you guys already know me. It's in my course. I want to get in before we take out this high. That's mechanically a way to filter low probability conditions. But anyways, we're almost at an hour here. I only answered 3 questions, dude. That's actually hilarious. Are you either going to slides and mob? Are you ever going? Oh, I can ask. It's not really up to me, guys. I just make them for the what do you call it? For you guys. But it's like an extension to my model or my course. But yeah, I think there needs to be an addition to my course because my course is very vanilla. It's literally just it's almost like the way I use GXT, like what's in my course, is just a way to get on side with narrative. But there's so much that can be put into a course with how to apply the model with narrative, that would help a lot, right? Because that's what's actually important. It's actually how to build a narrative and shit like that. It's not it's not GXT. Like GXT is not the sauce here. It's actually it's a very good model. Like it really is. It's a really good way to filter price action. Like you're aligning expansion candles for sure. But it's like you still gotta know when and where to use the model. That's always gonna overrule any type of entry model. That's gonna overrule any type of entry model. So that's what's actually important. So that's kind of why I made these slides to help you guys. But yeah, they need to be added in the course. But they would need to be like touched up because they might not be up to standard, etc. AM needs to review them and stuff like that. So then we have to type out like there's some backend stuff, but yeah, I'll probably ask if that can be added in the course. Bro, I'm really not gatekeeping, man. Some of the stuff I'm not gonna teach is because they're simply not my concepts. I can't teach someone else's concepts in a community that's a lot of people. Like in my one-on-ones, I do, but that's because it's one person. It's not just because they're paying me extra. That's not the reason why. I can't teach someone else's concepts in a paid community, right? That's fucked. That's just like messed up. But I will teach strength switching and just SMT and stuff in general because you're not gonna find strength switching anywhere else. I don't think. And SMT stuff, obviously, I'm gonna show you guys. Like, but that's gonna come last. Like, we have to go over a bunch of other stuff too, because like I said, like your ability to frame framework is number one, and then you confirm it with SMT and drivers. So pretty soon here we're gonna go over drivers, and there's a lot to go over drivers. It's very very repeatable. You can anticipate expansion like you saw me do on NP, etc. Yeah, I will explain drivers. I'm making a video on it. I'm making the slides right now. So I'm probably not going to put all the slides in my YouTube video because I'm not going to leak everything in the YouTube video, but I'm going to show you guys obviously like how to trade it with GXT, how to trade a candle 2 and stuff like that. We also have to go over entry stream, like not only like how to trade a candle 2, how to take positional entries. That's one thing, but just also how to filter your fractal models. That's another thing that I'm pretty sure T has gone over, but I'm just going to add it in there. But the entries part is going to be kind of like in combination with the drivers slides to show. So that I'm not going to show on YouTube because obviously I can't leak my model and I can't give everything away. But if you watch the YouTube video, like people are going to learn a lot from that for sure. But 1K loss. Yeah, dude, I risk a lot. If you guys see this, look at this 1K loss. This is my one loss this week. So like the way I trade is if I have a buffer, so like I have buffers on my accounts, like pretty decent buffers. I will risk the whole drawdown on one trade. Like that's what you see here. On Top Step, your daily drawdown is $1,000, and I'm risking the whole drawdown. So this is my one loss for the week. I didn't risk heavy for the rest of the week. But yeah, 9% this week. All you guys can do this, man. Like, trust me. But if that trade hit, oh god, it would have been a fat ass week. Would have been nice, but we're at an hour pretty much, guys. So probably gonna cut it down. Okay, what's the difference between you and me? I didn't see valid setups, but you did. I'm ending the week negative. You ending positive. Oh, I mean, like I said, you can learn my model mechanically. No one in here will be able to replicate my results. It's literally impossible because you don't have the market experience, right? You don't know. You might not have. You're not like there yet in a sense, right? Where you don't have that level of like filtering price. There's many factors, right? That's to be expected, to be honest. But so you in negative, I mean, it just takes time, right? I don't know how long you've been trading it or the fractal model, etc. But yeah, it takes time. But the most important thing to learn is not the model. It's not GXT necessarily. It's where to use it, when to use it. So I would focus on my stream April 5th. I would focus on my last stream to watch those two streams. That's going to help you on how to build a narrative, right? When to apply the GXT model, because we don't just apply it anywhere and everywhere. You're gonna get railed. Just like if you apply the unicorn model everywhere, you're gonna get destroyed. That would be like pattern traded. We don't pattern trade around here. But what's another stream? If you look at my backtest streams, that's a good way to put it all together, right? So there's a couple of streams that would help you, but it's just gonna take time. I'm telling you, dude. Like it took me 6 years. Like I have 6 years of experience probably over you. You know what I'm saying? I've just been trading my model longer than anyone in here, so it's like it's to be expected if I'm doing better than you. You can't necessarily take the same trades every single day. When it's clean, it's clean. But you guys see, a lot of times the market is not clean. Like, would I consider this an A plus trade? No. Would I consider any of these days A plus? No, they're not A plus. But with experience, you can learn when to filter out trades and whatnot, right? So it's hard. Trading is very, very hard. It's not gonna be easy. I promise you that. Can you elaborate on your 2-candle rule? How would you handle the pair if it doesn't reverse the key level within 2 candles? Wait, the other pair. Wait. How would you handle the pair if it doesn't? Okay, yeah. So like, that has to do with this slide here. It's my last stream. It literally has to do with this slide where like candle 1 hits the key level. We should reverse. We should anticipate ideally a swing formation. Like you can simplify it. When we hit a key level, the first swing point that forms should expand away. When it doesn't, we simply use the swing point low as the new invalidation point, because generally this is going to create a protected swing. If I show you an example of last week, this is a good example. And again, this is exactly how I traded, what do you call it? A driver, right? I traded before a driver. It's because of what happens prior to driver. So I'm telling you, the driver shit is like super, it's very, very consistent. But check this out. Let's just go over the week here. So this is Monday. This next candle is Monday. So it's like, we're just looking at what price is opening near, right? So obviously price is opening near these lows, right? This consolidation low, right? So if price opens low first into that, what is a candle opening low first generally support? It supports a bullish candle, right? When you get that reversal, that supports a bullish candle. Now, what's important, why this is a good key level, is because it's a relevant swing. Look at the space between this low and this low. I don't care about these lows because they're failure swings to the relevant swing, right? These lows are failure swings to this low. So it's the space between this low and this low, which creates a relevant swing. So when price manipulates this, you see the reversal signature. Because remember, when we hit a key level, there's 2 things we're looking for. It's a swing point. So here we don't have a swing point. Why don't we have a swing point? It's just because we engaged with this level late in the day. That's the only reason why there was not enough time for price to come all the way back basically up here. Like, it's just not gonna do it. Doesn't mean the reversal hasn't been put in, right? So I went over this last stream where if this is gonna be a reversal and we're not gonna sweep out the previous day's low, you simply set an invalidation point. This CST needs to hold, right? Or this fair value needs to hold, right? So remember when I talked about, I mentioned this earlier, is if the previous day reverses, right, and doesn't expand, then when will we expand? Early on in the next day, right? So it's this right here. I went over this example here, and you see the previous day printed SMT, right, or hit a key level, but it doesn't have a reversal candle. It didn't reverse. So if this is going to be a reversal, then the next day should expand. Same thing over here, right? So what we're trading is, if I come into New York and see this, I see that we're in the expansion phase. We're not trading the protraction phase. So all that means is we need to be in close proximity. I want to be trading in close proximity away from some key level, right? So taking that logic of this needs to hold, this fair value gap needs to hold for price to continue for a couple of reasons, right? When it creates that swing point, well, when you create a swing point, what is that creating? In certain scenarios, it's creating a relevant swing. So see this low? You see this low? See the space between them? These are relevant swings. So price needs to manipulate. If we're not going to expand away from this swing point like this, it needs to manipulate this low because it's a relevant swing. So this is this rule mechanically. Like you can mechanically define every single process when approaching the charts. Like you literally can. So here we have this swing point, but it doesn't reverse, right? It just consolidates. So how do we trade away from consolidation back to phases of price? We need to manipulate that low, which is a relevant swing. So what you see here is we do manipulate this low. It's just like the daily though, right? We hit the low, we don't have a swing formation, right? Just like this daily candle, it's a bearish expansion. So when would we expand if we're not going to create a candle two? Early on the candle, boom, it expands. You see that without taking out this low. It's the same thing, right? So now I have a protected swing because when you manipulate a relevant swing, it creates a protected swing, right? So that's what we see here. When we manipulate this relevant swing, we have a daily, some sort of higher time from protected swing. So now I have that intraday, right? Because price is really far away from the daily open. So obviously I want to be trading away from the low of day, but if price is super far away from it, I need a more close proximity or more local key level to be trading away from, or a protected swing. So that's what we have here, right? And you see that 8 o'clock, or just prior to the driver, which is not, maybe we have news here? No, we don't. We have 9:30. So if we put in some sort of reversal prior to 9:30, 9:30 should expand away. This is another thing with drivers. We'll get into in a minute, but it's when it's near swing point, but also near the invalidation level, which is this higher time frame opposing candle. It should just expand away, right? So this is why I'm getting in before 9:30 to catch this. And where's our draw? Is the current week's high, which is just like we trade a daily reversal candle. We target the unestablished high of the day, right? Which is in the form of session highs, which is like Asia, which is formed in the early on in the candle. Same thing on the weekly candle. This is formed early on the candle, which is on Sunday, right? So that's our target there. I don't even remember like what. Oh yeah. So this was just talking about how to trade away from a swing point. I don't even remember the question entirely. I'm not gonna lie. Oh, that was the 2 candle rule. Yeah, exactly. Yeah. See, that's an example there. Been a tweak. All right, guys, we're above an hour, so I'm gonna end the stream here. Yeah, probably gonna end the stream here, guys. Hopefully you learned something, but next week I'll probably have those slides done for drivers, so we'll probably go over drivers next. It's gonna be a really good stream. This is how you confirm narrative. So again, this is how we actually confirm a GXT model or a low of day, etc. Like these stuff are actually what's important. It's SMT and drivers. So we'll get into SMT at some point. But yeah, this will be uploaded. So a lot of people ask me like, when are you gonna upload the stream? I don't upload them. I just send them to T Trades and AM Trades and they upload it. So it's not actually up to me. So I see a lot of people ask me every stream, but yeah, I'll catch you guys later. Y'all have a good weekend.